Hello and welcome to another video with Trading 212 and me, David Jones. In the next 10 minutes, we're going to take a look at what was moving markets over the last week, look ahead to the major events to keep an eye on in the days ahead, and finally spend a bit of time looking at some trading strategy and education that will hopefully help you when it comes to finding opportunities to trade in the markets. So there's a lot to cram into 10 minutes, so let's get started. If you look at what was happening last week, first of all, the big market news was probably the move in US stock markets. On Tuesday, by the end of trade on Tuesday, the Dow had dropped by, I think it was 1.1% by the end of the day. Now, normally, a 1% drop in US stock markets isn't really that headline grabbing, but this one was something of an exception because we've gone more than 100 days without US stock markets falling by 1% or more. So it was pretty big news when it happened. You know, since we had the presidential election back in November last year, stock markets have gained an awful lot of ground. You know, it's been referred to as the Trump trade, and we've seen the US indices, the Dow, the S&P, the Nasdaq, push out to fresh all-time highs and just grind their way higher. So a 1% sell-off, it's been a long time coming, and it finally came last Tuesday. So we'll take a look at US indices today to see where the opportunities could be in the days ahead. When it comes to what to look out for on the economic calendar, it's a bit of a quiet week this week. I'd say, first of all, Tuesday afternoon, we've got some consumer confidence figures coming out in the USA. So that can give markets a feel for how the man in the street in the USA feels at the moment, how confident or not they're feeling. And then we've probably got to jump forwards to Friday then for the next major announcement. That's in the morning, and it's a focus on the UK economy. It's the latest GDP, gross domestic product figure for the UK that will show us how healthy the economy is in the UK. The expectations are that for the last quarter, the economy should have grown at about 0.7%, but we'll find out on Friday morning. Clearly, the market to watch for this one is the pound, you know, pound against the dollar, euro sterling, those sort of markets. Normally, a fair degree of volatility when these sort of data releases come out. So that's what happened and what to look forward to. Now let's have a look at a strategy. What I'm going to do today is focus on what's probably the most basic form of chart analysis, but no less effective because of that. I think it can help you signal areas where to buy, where to sell, and all importantly, where to set your stop loss, where to get out if market sentiment changes, so you take just a small loss. So we're going to have a look at the concept of support and resistance on price charts. When you see support and resistance drawn in a textbook, it typically looks something like this. We have a market that may have been selling off for a while, then hits a level, sentiment changes, and the market recovers some of those previous losses. When we have this sort of situation, this is where we have potential support, a level below the market where sentiment changed and the buyers came back in. When we have a level like this, many traders will be watching it closely to see what happens next. Maybe the market hits a level and then once again starts to sell off. When it approaches that previous support, traders will be watching for the sign of a bounce. For the buyers who came in last time, we saw sentiment change, maybe we'll see the same thing again. So this sort of thing, many traders would take as a buy signal. Let's assume it all works out okay and the market recovers and rallies. The next level they'll be watching is that previous high. That's known as resistance. This is where the sentiment changed once again at this point here, where the sellers came back in to the market. So a trader who may have bought down here will be watching to see if the market runs out of steam ahead of that previous high and think, well, maybe it's time to take profits. And even, of course, if it does start to falter, look to sell short ahead of that level and profit from a slide in the market. As I say, it doesn't work all the time, but this idea of support and resistance can really help you identify potential areas to set up a trade and also help manage the risk. So that's some of the theory of how it works, and it can be really effective. I think particularly when it comes to managing your risk. I think, you know, it's really important to set stop losses on a trade. When you enter a trade, to have an idea, well, if the market trades to this level, then I'm probably wrong. So, it's good risk management to place stop losses. But I think plenty of people, when they first start trading, their approach to stop losses is like that: stick a finger in the air and hope it's in the right place. Whereas if you're using support and resistance levels, you're setting them at definite areas in the market where if that level does break, it's a suggestion that maybe sentiment is changing. So with that in mind, let's take a look at a couple of markets for the days ahead and the big levels to keep an eye on. So we're on the trading platform. The market that we're going to look at is the S&P 500. So let's just bring it up. We'll bring up the chart by clicking on here. And we'll just hide this list by clicking here. We can bring it back if we want to by clicking on there. Let me just change the chart. Let's take a longer term view first of all. So we're going to click on here, change it to candlesticks, and make them daily candlesticks. Now first of all, about the S&P 500, I'm sure plenty of you are familiar with the Dow Jones US stock market index, and that's fine. But the Dow Jones is only 30 shares. The S&P, as its name suggests, is made up of 500 shares. So it's a broader view of the US market. Now you can see the Trump trade here, the spike, the big move here, that was on US election results day. It happened in the overnight market, and since then you can see just how far markets have moved. We've seen it push out to fresh all-time highs. But let's take a look at the support levels left after the big plunge last week. So the chart we're looking at now, this is a 30-minute candlestick chart of the S&P 500. So each candle represents 30 minutes worth of trading. And you can see the big sell-off that we had last Tuesday. The market dropped really sharply relative to how it's been moving recently. But we did find some stability in the early hours in out-of-hours trading. Here we go, 6 o'clock in the morning, 22nd of March. And then actually, when real trade started in the US session, we did see that level hold again. So let's draw a support line in here. You can access the lines from the right-hand side menu. So we're going to choose horizontal line, and it's the top one, just a simple horizontal line. So there is our potential support line. Now you can see if we move to Friday's session, the market once again came back down to that level, but we did see, it had a little move through, but we did see that level hold. So for the S&P 500 going into this week, that sort of 2336, 2335 area is going to be a really important one to watch, because that was the area where the plunge stopped. So we did see a change in sentiment. So I would suggest, if you're looking at US markets, keep an eye on how the S&P 500 performs if it does slide back towards that area. We'd assume at the moment we'd see buyers come back in, but if the level breaks, many people would take it as a sign that there could be further weakness to come. So that's the US market we're looking at there, and I think there are some really interesting levels to watch that have been left after the slides that we saw last week. If the market starts to drift off again this week, I think it's worth keeping an eye on how it reacts if it does move back to these previous lows. So that's the idea of support. Resistance, of course, is the opposite of support. It's where a market is bumping its head up above a level and can't get through. And euro dollar is one, I think, that could be worthy of watching this week. So let's take a look at some of the resistance levels to watch in the euro against the US dollar. Let's take a look at this idea of resistance. And I think the euro dollar is an interesting one at the moment. Let's bring the chart up. I want a longer term chart for the euro just to show you this level that I think we need to keep an eye on. So we're going to change it to a daily chart. Again, we'll choose candlesticks. And let's just hide the list on the left for now so we get a full view of this chart. The euro is really interesting because towards the end of last year, it slipped to a fresh multi-year low against the US dollar. But since then, we have seen something of a recovery, but there's a really big level to watch. Let's get our horizontal line again. So on the way down, we saw the odd euro rally. Markets don't move in a straight line. But we saw the euro, when it rallied up towards 108.70, this would have been beginning of December last year, the sellers came back out, pushed the market lower. We saw another attempt on that level towards the end of January, beginning of February. Let's just draw another line on there. So around about the 108.40 area. Friday saw the euro finish trade around about the 108 mark. This area just above, from 108.40 to 108.75, let's say, has been a real barrier for euro dollar in the past. It's where sentiment has changed. And again, it's going to be an important one, I think, to watch this week. Whenever we've been up here in the last few months, we've seen sentiment change and the sellers come back out. So this is the idea of resistance and how you can use it to try and figure out, well, okay, should I be buying or selling near here? That's it for this week. There's plenty, I think, to be keeping an eye on in the days ahead. We'll be back again the same time next week, looking at some different markets and another different trading approach when it comes to strategies. If you'd like us to cover anything in the future, just leave us a message in the comments below. We'll wrap things up there, and I hope you have a good trading week.